got to the point where I couldn't self-manage everything anymore. It was just too much work along with the family and the job. So I started to invest passively in syndications and realized I can make as much money doing this as I do managing my own property. So I sold everything.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I'm excited to have Steeve Breton. Steve, how are you doing today?
Doing great. How are you?
I am fantastic, man. I appreciate you joining me on the show. A little bit about Steve. He began investing in real estate in 2012, now has 1,300 apartment units under management. He has diverse real estate experience, including flips, ground up development, private lending, but his passion right now is to help his friends invest in multifamily. Steve also speaks at real estate conferences. He's a real estate coach where he teaches how to invest in multifamily properties for cash flow. So with that said, Steve, why don't you give our listeners a bit more about your background and what you got going on today?
Yeah, sure. Just the quick story was I was an IT guy, went and got my MBA as well because I didn't want to just work on the technical aspects.
Yep.
Learned financing, project management, and did pretty well in that career. Actually loved it for a long time, but the last sort of 5 years of it, I had started investing in real estate, actually about 10 years prior, before my leaving the career. Really enjoyed the real estate thing. Next thing I knew, I was buying, duplexes, triplexes in my local area, self-managing, and got to the point where I couldn't self-manage everything anymore. It was just too much work along with the family and the job. So I started to invest passively in syndications and realized I can make as much money doing this as I do managing my own property. So I sold everything. So, I slowly sold off everything I had, put it into passive investments to the point, I also started putting the money that I was putting prior in the 401k, I stopped putting that away as well, other than the small percentage match from the company. Realizing that if I put it away in real estate investments that pay cash flow now, I could probably leave my job even earlier. So sure enough, kind of built up those cash flows over time and was able to leave the job. And I liked the syndication so much that I just started to sponsor deals along with the friends that I've, with the friendships I'd made along the way by investing in these things.
Cool. So, yeah. So, and that's something I think a lot of people, I see these people doing turnkey and all kinds of different strategies. And that's maybe the right decision, maybe not. But like you said, that passive investing, sometimes you're making as much or more money and you don't have the headache and the hassle. Especially when you have a day job and you got kids.
Well, it's funny because when I started first looking, I was very first thing was turnkey because I heard somebody talking about it on a podcast or YouTube or something.
Yeah,
I was like, well, that seems really simple. Cash flow great. And then the more I looked into it, I'm like, oh, it looks like maybe it doesn't cash flow quite as well as it does on paper. And it seems like most people that go into that end up buying their own stuff. They'll buy single families or whatever. And
did
then
you ever do a turnkey?
I'm sorry?
Did you ever buy a turnkey?
I didn't.
You didn't. Okay.
I just skipped right over it.
Yeah.
And then it was like everyone who buys single family then eventually goes and buys duplexes and triplexes. Mm-hmm. And maybe not everyone, gross generalization, but yeah. And then people that do that oftentimes go into syndication. I was like, man, I'm going to at least skip to the duplex. My first purchase was actually a triplex. Bought a bunch of those because it just seemed really easy. But yeah, I skipped the first couple, but then jumped into the syndication. I've got friends who went straight to syndication and said, they don't want to get their hands dirty. I had the curse of being handy. So, being a landlord and self-managing, I was able to make a good amount of money doing it only because I didn't have to spend a lot of money on, services, carpenters, plumbers, whatever. But at the same time, I had to get my hands dirty. So it wasn't really that passive.
Yeah. Yeah. It's funny how you said that I had the curse of being handy because
it's awful.
I feel the same way. Like I can do all this work. Now it's good now that I finally figured out, like I can't be the guy doing the job. So now it's good because I know I know what needs to be done, and I know
Yeah.
what costs make sense and don't make sense.
Right.
I can help lead a team, but before, like, yeah, I'm going to get my hands dirty. I'm going to get in there and do this stuff. And you like, you're the one that has to do it all because you
Yeah.
know how to
Oh,
do it.
you're using up 2 hours of your time to save $100, right?
Yeah.
Because you want it done right and you want it done today, instead of just saying, I'm going to bid this thing out and let the plumber just go and take care of it.
Yeah. And how many trips do you take to the store when you try to do a plumbing project that should take you, 45 minutes and it ends up taking you 3 hours and you go, man, I
Right.
wish I would have hired a plumber.
Yeah. Yeah. But that said, on that single family turnkey or single family purchases for your own,
Yeah.
if what I always tell people is if that's the thing that makes you super comfortable, if self-managing a duplex is the only thing that you're actually going to move on because you're afraid to go, or you just don't want to trust other people yet, then go buy that thing. Go buy the single
Mm.
family and get started at something. But eventually you'll figure it out, and either maybe you'll buy 100 single families, but my guess is you'll end up doing these syndicated deals eventually.
Yeah. That's a good point, right? Steve's not trying to tell you to not do it, right? Go ahead and buy that because it's going to allow you to take action and actually get in the corridor is really what you're saying. Like whatever you need to do to get in the corridor, let's get in the corridor. But eventually you've got to expand that mindset and figure out that you
Right.
can do a lot more.
Yeah.
How did you take us through that growth? Cause you're investing passively. You realize you can't be spending all your time on this. You're investing passively. You saw the income coming in. And so take us through then how do you start to transition into bringing other people into these deals, getting to be a part of the deals? Like how'd you transition into that, into where you're at right now?
Yeah. So, again, with the duplexes and triplexes, it was all about control, right? I was handy. I knew how to manage the finances, simple budgeting on these projects. I could take them from, soup to nuts all the way through. Had full control. And then going into syndication, you have to release some of that control. So at first it was, 50K into a multifamily syndication with somebody that was referred by a friend. And I kind of watched that happen, and I saw the cash flows coming in. I'm like, oh, it really does just show up in my bank account.
Mm.
Okay, so this is actually working. So I did a couple more, and then one of them went full cycle, and next thing I know, I've got a nice appreciation bump at the end. So that ends up in the bank account as well. And so the more it proved itself out, the more I was telling my friends and family, like, hey, you should see what I'm investing in here. You guys ought to jump in as well, because I just wanted to make sure that they were also putting their money to work for them, giving everybody copies of Rich Dad Poor Dad, and just trying to educate them as well, because I was at first I was actually furious that no one had ever taught me these things.
Mm.
I'm like, why don't they
Yeah.
teach this in school, like basic financial management or real estate, or even when I went to get my MBA, there was never a discussion about real estate or managing your finances the way I manage them today. So I figured I would just help friends and family. And next thing I knew, I had this following of, a bunch of my neighbors, a few friends and family that invested alongside me. Every time I went into an investment passively, I would share it with them. And then, the sponsors were making out when I'm bringing in 500,000. At some point, it was $1 million that I'm bringing into a deal that I'm not even sponsored on. I'm just saying, join me in this investment. It looks like a good one. And my friends and family were trusting me because I knew in my job, in my W-2, I was managing finances, large IT projects. And then I also had the real estate experience. So they just figured, you must know what he's doing. And it saved them the burden of having to go figure it out themselves. And then over time, I'd start getting calls from sponsors saying, hey, that deal you invested in, is there anybody else? Because we're a little bit short. Anyone else that you can recommend this to? And then I was like, wait a second, I could probably do something with this. And I'm thinking about leaving my job, and, how do I, become more active in these things and just do it sort of as a part-time, side hustle.
Yeah.
And in that, I started the business in 2017, got the LLC, and when I say, a business, but it was really just a means for me to put a little bit of structure around what I was already doing, and to, collect a little bit of additional equity when I was doing it. But within a year, I left my job.
Nice.
That was left the job 2 years ago, started the business, 2017. So I guess a little bit over that now, almost 4 years.
Cool. So basically, you gain that trust of your neighbors, your friends, your family. They could see that, hey, if Steve's going to go in this deal, this is a deal for me. And went along for the ride. And then you started partnering with these sponsors and become a part of their team
Right.
in order to not only bring money into the deal, but get some equity yourself as well. So
Yes.
definitely. What's a mistake that you've made along the way here, and how have you learned from that?
It's funny. I like to tell people I've got two older siblings, so I love to learn from their mistakes. And they never got into real estate, but I do. One of the things I learned early on was I was not going to be great at getting deals under contract when I live in Boston in the Northeast, where everything's very expensive. And I want to invest in Texas or Georgia, Florida, some of the better growth markets, the better multifamily markets. And so mistake I made initially was to try to do that on my own. And then eventually realized, okay, people work in partnerships when they're doing this. They'll, partner up with people that are working in those markets and figure out how to work together. And so what I realized from my early experience was, working to help people raise capital was one thing. But I also realized that the SEC doesn't like that if you're simply bringing money to a deal, because that's acting as a broker dealer, and I don't have the Series 7 licenses and all that stuff to do that. So I realized there's a lot more here. I better go get some serious training, sign up for a mentor, and really learn how to do this properly. And so that was the lesson was, as easy as it is to just get moving, you got to be super careful in doing it right. And I guess that's the opposite end of the spectrum from studying this stuff forever and not moving. I was kind of like, I'm just going to jump in this thing and take action, and realized there was a lot more to it. So I spent quite a bit of time figuring all that out. I realized I loved to underwrite and to look at the finances. So what I started to do was bring that experience or expertise, financial management, underwriting, et cetera, to some of the partners that I had worked with in the past. And what I told them was, I will underwrite all of your deals for you, just to help you, because I wanted to be the best partner possible so that they would come to me more often. And then it got into, I'm going to be jumping on those management calls with you. And by the way, if you can't make a call, just no worries, I'll be there. I'll take notes. And then it was, I'll write all of the investor communications for you. And I, again, just trying to add as much value as possible, so that I was the first person they were thinking of when they thought, I might need a little bit of help on this deal, or I might need a little bit of help in my business in general. So through that, I came up with 3 or 4 partnerships that I've really enjoyed, and we continue to work together.
If you're exploring the different ways to invest in real estate, then you got to check out my new book called Book About Real Estate. It summarizes, reviews, and condenses over 20 top real estate books to help give you an understanding of the full spectrum of real estate investing very quickly. So buy it today on Amazon by searching for Book About Real Estate by Matt Jones.
There's people that are listening to this that think, well, I've got some decent amount of friends, family that maybe I could raise money from, and I could just raise money and put them in these deals and get paid to do that. That sounds really good. Now, you mentioned there though that you got to be careful. So can you take us through? I know you're obviously not an attorney, so this is not legal advice, right? This is just your experience or what you've learned.
Mm-hmm.
Take us through some of the maybe just a couple things that people really need to be aware of and to look out for if they are thinking about, hey, maybe I'd love to bring other people's money into a deal and, somehow get rewarded for that.
Sure. Yeah. So, assuming you have a friend or somebody who has a large multifamily deal, and they're looking for help raising the capital. So they call you and say, hey, do you want to raise capital with me on this deal? And and this happens all the time. I get calls all the time like this. They already have the deal under contract. They've already started raising capital, and now they're calling me because they need help on the, to finish it off, to close the deal. At that point, it's way too late. So, one of the things with the SEC is they want to see that you're truly a partner in that deal. And one of the ways to show that you're truly a partner is that you were involved in the chase, right? In looking at deals, underwriting deals. You finally made an offer on this one together. You're now going and doing due diligence together. And then sure, you raise capital together as well. That just happens to be one of the many things. But you're truly an active partner on the deal. And that gives you the ability to raise capital without it looking as though, or without it being you just raising capital. Right?
Yeah.
So that's the key distinction there, is that you're active in many aspects. Some people think, you can raise capital as long as you do like one other thing, like send investor communications, or for me, that's really a gray area. And I prefer to lean on the side of being 100% right in this regard, because I have way too much to lose.
Yeah, for sure. Yeah, I think that's, and that's, I've heard the same thing. So basically, look, if you're looking at doing this, like Steve said, if you get approached and somebody wants you to raise money, you can't just raise money for them, right? So the best approach is to create some relationships with 2, 3, 4 companies, probably not, 10, 20, 30 companies, because
Right.
you probably want to have your few that you're bringing to your investors, create relationships with those few companies and be a part of their entire process, right? Be helping them out, be part of the process. You don't need to do everything, but you need to be a part of a couple tasks. I think that's smart, versus I definitely see that all the time. People have a deal that they start raising from and they had zero part of anything, and they're raising money. And that's the only reason why they're getting paid, is because they're raising money.
And it's going to be
that,
obvious.
It's very obvious. And your main skill that you're bringing to the table is your relationships, right? But you're also a part of the deal other than that. And I think that's really important. And as you said too, you've got your underwriting strength. Maybe you're not good at underwriting, but you're good at studying markets. Well, that's maybe what you're doing. You're coming up with data and research on the markets, and but you've got to figure out how can you add value other than just bringing the money to the table.
Yeah. And there's other things as well. If you happen to have high net worth, you can sign on the loans, which I do all the time, and I would want to regardless, because it just shows that I have that skin in the game.
Yeah.
Being involved in the asset management to me is huge, because that really shows that you're involved on a weekly basis.
Yeah.
At a minimum, and sometimes more often. When COVID hit, we were on calls daily for a while. So over time as well. So initially it was what can I bring, and how do I add value in all these little ways. Over time, after doing 10 deals, now I'm joining those weekly calls, 10 of them, and what I learn in one call, I'm applying on the next one. So I'm starting to add value in terms of how you manage the properties. For the past year or so, I felt extremely comfortable in those meetings and offering advice or different opinions or ways of doing things, because I'm seeing, 8 different property management companies across 4 different partners. Everyone has their own opinions, their own way of dealing with something like COVID or evictions or, a fire, and dealing with the insurance companies or whatever it is. But as these things come up, I'm like, wait, I had a property, in South Georgia, and the PM suggested we do this. And this is the way we went. It worked out really well. And it could be 180 degrees from what the current PM on the call I'm on is planning to do. So it's just nice to be able to bring those different opinions and just throw stuff out there. Make sure we're not just operating on autopilot.
And that's a big value you're now bringing. Obviously, you didn't bring that early on in the game, right? Because you're still learning and understanding, and probably kind of sitting on the back of those calls, keeping your mouth mostly shut.
Yep.
But now you've been involved in these deals a lot. You're on the asset management calls weekly. And so, like you said, you're able to bring that a ton of value. I notice like a lot of things, I'll make suggestions I see from one property management company to the other. But now you're seeing multiple property management companies and multiple different sponsors. And that is, I think, extremely valuable. I'm sure you're bringing a ton of value to the table through that. And something your partners likely really like about bringing you onto their deals is that they know Steve's going to actually be a part of the deal and not just in the backseat.
Yeah. At first I really wanted to have, it was almost like I was saying, I insist on being part of that call. Please invite me, please include me, because I wanted to learn the business as well. So yeah, it was super quiet at first, learned a ton of stuff there. And then as I became more confident in the space, then I started to speak up a bit. But at the same time, now I probably have a lot of opinions that I don't share, because I see the way they're operating and I see this operator's doing a great job, or the property management company. Like, my opinion might not really change things that much. So if I don't have a really strong feeling about something, I'll just let things flow, because I want to be an easy partner to work with and add value when it's truly valuable, not just speak just to hear myself speak.
That's a really good point, because it's just really easy to do. You've got some knowledge, you think you're going to have to share it with everybody.
Yeah.
Sometimes you got to
And
keep
it's
your mouth
exciting.
shut. Yeah, and it's exciting. At least you think it's exciting. Cool. Somebody who's looking to do this as well, what are anything like stick out to you on building that investor list, building, cultivating, growing that investor list, and maintaining it? Anything that stick out to you?
I can only look at kind of my life and what I've done. So I came into it late in the game. I was already in my mid 40s. I already had a career where I showed that I was very diligent, managing projects, managing money, in that career. Integrity, always doing what I said I was going to do. Over time, that stuff really matters, because when people are thinking about investing their money, that's the sort of person they want to invest with. So, I wasn't doing it because I thought I was going to become a syndicator and I wanted to kind of show myself in this way. I just, I guess part of it is luck, that I happened to be in those positions and act in that way. And it just translated really well. But there's certainly some key things there that can be learned. When you're dealing with your investors, for sure, do exactly what you say you're going to do. Be sure you communicate really well, understand the finances inside and out on a deal. If you don't know those numbers inside and out, you shouldn't even be part of the deal, never mind trying to bring your friends and family into it with you. So, a couple of really key things there from that perspective.
Yeah. Do you have any strategies on cultivating new investor relationships, or is it mostly word of mouth? How are you getting your investors?
So there's 2 or 3 meetups here that happen on a monthly basis. A little less in 2020. Now they're online, but I used to go to. Sorry about that. I used to go to all these meetups, and we talked about duplexes or buying that single family, or how to manage self-manage, which is what most of the meetups were at the time. And slowly that transitioned a bit as I transitioned. People would say, we go around the room, introduce ourselves on occasion, and people say, I own 3 units, or I own 5 units, and I'd be like, 1,200 units. And, people are just like, what are you doing? I'm like, well, I don't, actually own them all outright. I'm a partner in these things. Maybe that equates to 30 units, 40 units. But, it was just a different conversation. At the same time, I was always helping the newer people that wanted to buy that duplex. Here's how you do quick underwriting here in Boston. Here's what your numbers should look like. Here's how to get the financing. I'd go have coffee with them, whatever I could do to add value. Again, it was kind of my way of giving back. It was fun. And I was always thinking in the back of my mind, and I'd tell them, if you happen to come across like a 8 unit or 10 unit, and you're not sure you can take it down yourself, maybe you don't have the down payment, or the bank won't give you the financing because of your net worth, let me know. Maybe we could partner together. So there was always a little something there. If I add enough value, maybe I'll end up with another deal or something locally. But that turned into people that wanted to buy a duplex or get into real estate, started looking into it, and realized, man, this is really hard. this is much more work than I thought it was going to be. I'm better off focusing on my career as a physician or a CPA or whatever it is that they do, make money that way and just invest it passively. And next thing I know, they're calling me and saying, let me know if you have a deal coming up here. I've got some money to invest.
Yep. Yep. And there's a lot of people I feel that, they're for some reason are trying to do that. They've got this great job that they actually love.
Mm-hmm.
And it's like, well, maybe there's an easier way sometimes.
Yeah.
A couple last questions before we completely wrap up here. What's a favorite book that you can recommend?
The One Thing by Gary Keller. That's probably the thing that really changed how I approach this business. The other one was Turning Pro by Steven Pressfield. But both of those really helped me from going from I think it was in Pressfield's book. He was saying something about being a dabbler. If you're not a pro, you're just dabbling. And if you're dabbling, you're never going to be successful.
Yeah.
So when I decided to actually kind of launch this business and treat it seriously, I had just read that book, and that's the thing that told me hey, go get an LLC, create a website, business cards, and get yourself educated, for real, like somebody who is actually going to change careers would be doing. And so I went through that whole process, and it changed everything.
How do you find a good sponsor that you can trust, that you really understand their underwriting and understand their business model and know that they're not blowing smoke? Because there's a lot out there that are blowing smoke. I'm not going to name names, but
they certainly are.
How do you go through that process, verify them, get to know them, trust them? Take us through a couple steps that you've done.
I'll say two first things. First is that there are also a lot of really good syndicators out there as well. Plenty of blowing smoke. I'd say probably majority of them are fine. It's like anything else in life. The first thing you need to do is just get yourself educated, know how to ask at least a few really basic questions that force a dialogue so that you can sort of ascertain a bit, does this person really know what they're talking about? Have they done their homework? And I will say, I didn't do any of those things on my first few deals that I invested passively. A friend of mine told me this was a good syndicator. I just threw money at him, which is crazy. Turned out really well, fortunately. Well enough that it really gave me the idea of maybe going into this business.
Yeah.
But
it went the other way. We wouldn't be here having this conversation.
Right? It would have been over. One deal would have killed it.
Yeah.
It's nuts to even think that way, or think that that's possible. But so then getting some basic education. So, there's one guy who has a podcast out there. He sells some online modules. It was I don't know, at the time, and this was years ago. So maybe $500 or something. I'm like, okay, that's a pretty small investment compared to what I could lose if I don't do this right.
Yeah.
So I just went through those online modules and I learned, some basic underwriting. And so now it's, so how do I find people? How do I identify people? Initially, I watch a bunch of podcasts or listen to podcasts, and the people that I feel like I connect with, I would give them a call or send them an email and, somehow try to connect with them.
Gotcha.
And then get on their list. And then I might be on 10 different lists, and I'll start getting emails on occasion when they have a deal. And then it's, can I see your underwriting? Can we jump on a call and talk about it? And then asking a few questions again about the things that I learned about. How do you know you can raise rents this way? Right? Have you done rental comps just like you would do a housing or
sales comps,
single family comps? Yeah, sales comps. And tell me about that process. How do you do that? Right? Just asking them, digging a little bit. If they did their homework, they're going to tell you everything they've done. I know for a fact that these 3 properties that are within a half mile are perfect comps. Look, here's why they're perfect comps, and here's what they're currently renting at. And they'll get into all that detail. Now you're dealing with somebody who's done their homework versus somebody who just says, well, I asked a property management company. Or worse yet, the broker that I'm buying this from told me I could raise rents. So there's a few other questions like that you can ask. Todd, I think you do training as well, don't you?
Passive
and active. Yeah.
Yep.
So, I would say the most important thing is to get a little educated, and there's so many more avenues now to do that. Connecting on people's websites like yours, Todd, and just get the basics, and it'll take you a really long way.
Are you talking with, or would you suggest people to talk with the experienced company, that's got 5,000, 10,000, 15,000 units, or do you talk with a company that's maybe a little more green, that's maybe at, 500 or 1,000 or
Yeah.
1,500 units?
It is a very different experience when I still invest a lot passively. When you're investing with somebody or a larger company that has, thousands of units under management, you're going to see that email in your inbox, and they're going to say, this is going to go quick, which a lot of people are saying these days. But in their case, it's true. You might reply to that deal, the next day, and they say, sorry, we're full. And they just raised, $5 million in 24 hours. In that case, if you ask that person, hey, can we get on a phone call? Can you walk me through your underwriting? It's just not going to happen. Right. They just don't have time for that. For your 50K, they're going to say, I've got most of my investors putting in 200K, and they don't even ask questions. So why am I going to spend my time with you?
Yeah.
It doesn't mean they don't have amazing deals. Some of them do have amazing deals. I will on occasion invest with some of those sponsors without having a phone call. I just look at the deal. I know where it is based on their history, their track record. I'll go ahead and make that investment. But that's after a lot of experience. I don't recommend that for a lot of people.
Yeah.
The other end of the spectrum is somebody who's a bit newer in, right? They've got a few hundred doors, or they've done 2 or 3 deals. Maybe it's a friend of a friend. That person, you can have a half-hour conversation for sure. They'll walk you through the underwriting. They'll tell you about the business plan. You can ask a lot of questions, and it'll help you get into the deal. It'll make you feel more comfortable about multifamily investing in general. I wouldn't say to go have multiple of those conversations and not invest, because now you're wasting people's time. But if you're truly interested in investing, you think you're ready, then have one of those conversations. Tell somebody you're interested in their deal, go through it, and if it's good, make the investment.
Yeah. I like it. Good advice. All right. So last question before we wrap up. What are your 3 pillars of wealth creation?
3 pillars. So I would say, I'm just thinking back when I really started to create wealth was when I started buying the duplexes. And when I sold those, I realized how much wealth I had created. The reason I was able to do that was because of my curiosity and willingness to self-educate. So, if I had a question, I would say, well, the internet definitely has the answer. So am I going to watch more TV tonight, or am I going to hop on the internet and do a little bit of research on that question I had? And I realized how much information there really is out there. And again, today it's 1,000 times more information.
Yeah, it's unreal.
There is no question that is left unanswered.
Yeah.
There. It might take you a lot of time to pull it all together. If you really want to go far in this space, it's better to hire a mentor. But you can self-educate a fair amount before you go down that path. So be curious and just take the time. Go get those questions answered instead of watching that, whatever 5th episode of the series you're watching. Just watch one episode.
Yeah.
Or none.
Yeah.
Yeah.
Go do some research.
Yeah. So that's a big one. The curiosity piece. Gratitude is a huge one for me as well. Always being grateful for what I have, because I feel like if you're not grateful in the moment for what you have, then why on earth would you have more? How are you going to get more if you don't already appreciate what you have?
Yeah.
I think that really is a good mindset to have. So focusing on who, not what or how, is a big one as well. I would say that's probably the biggest reason for my success in the syndication space, was not going it alone and trying to figure out how, or trying to figure out all the aspects of what, but instead finding the right people, asking who, seeking them out, doing deals with them. And I learned a ton. I mean, I literally learned the entire business on those first couple of deals I did. where I really relied on somebody else to walk me through all the basics. And then I mimicked literally everything they did, or 99% of what they did.
Yeah. 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 Good stuff, man. Well, Steve, I really appreciate you talking us through your experience, the partnerships that you've built. Obviously the value of building those good reputations. And you mentioned that it was luck, that you were in the situation, but, luck may play into it, but people see you as a trustworthy person that does what he says he's going to do, communicates, and that they can just know that, hey, if Steve's in this, I'm in this, right? And so that's a ton of value. So yeah, maybe a little bit of luck played into some aspects of it, but it's not on purpose, right?
Yeah. And I don't want to say it's all luck, right? Like you're saying, right? You make your own luck to some degree. If I were to say it's all luck, that means that it's going to be really hard for anybody else to do this.
Yeah.
Or they have to be lucky to do it. That's not at all true. Again,
luck may play into things, but you set yourself up for that luck, right?
Right on.
That's the key. So, so really good stuff. Appreciate it. How can our listeners get in touch with you, learn more about what you got going on?
Easiest thing is hitting my website at velocitycap.com, which is short for Velocity Capital.
Awesome, man. Well, again, appreciate it. You have a fantastic rest of the day.
Yeah, this has been great. Thanks, Todd.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.